The question is this one case, or is this the beginning of what might be a domino effect in leverage loans?
It's one case, but it's a very illustrative case because there's so many loans like Clover out there in the leverage loan market. So $1.3 trillion market is not small, and 60% of the loans in that market have only loan only, which means there's no subordinated debt. That means there's a lot more volatility when something goes wrong. And it's covenant light, which means that lenders have very little recourse to interrupt or to go in and get a seat at the table if something goes wrong.
So take us through what happened. It lost a third of its value very quickly. It started a nosedive. People ran for the exits. Did we see any contagion? Did any other loans go this way?
At the moment, no, because the Federal Reserve is very much lifting up markets. The question is if there are more loans like this, and what does this show? Because liquidity can vanish like that. Right now, there's a lot of liquidity, and there's a lot of demand from CLOs currently. But one loan like this, but whether there is two or whether it's three, and the risk is not just about defaults, it's about downgrade risk. Because when rating agencies downgrade a loan, then CLOs and some mutual funds become forced sellers. What will that do to a market?
So what are the forecasts for fallen angels? We've definitely heard a lot of concern about leverage loans, and for a long time now. We even had somebody just a little while ago talking about that market. When do we get a wave of downgrades?
Yeah, so right now people are thinking things are good, corporate earnings are fine. So probably not this year, but next year. What will happen when earnings start to decline? Or if people are not, or if there is all these trade tensions, if companies start retracting and not investing as much, if the capital markets closes. So it's not a concern for today, but definitely out in the future, there's a big worry.
But even with all of these warnings, and they've been going on for a while now, and you've been reading great stories, these companies like WeWork and all these other companies that are issuing sort of covenant light and no covenant loans are still finding buyers, no?
Yes, because there's 13 trillion of negative yields, and people are searching for yields right now, and leveraged loans are an area they can buy, and CLOs are an area that is attractive, and so people are still piling in, regardless of all the warnings.
Is there any rating agency that's maybe ahead of the curve here?
I don't think so. I think they're all pretty much equal in the sense that they've been warning about some of the risks on the broader market, but perhaps not so much in the individual loans.
Okay, and the Fed, can it be expected to help out?
Yeah, well, they say they're watching, but they don't think that there's too much of a systemic risk, and so all they're doing right now is watching.